Is there a national housing emergency? That's the question and headline making waves in DC this week. And it could reshape permitting, zoning, and supply if it happens. Now, the problems is we often hear the big promises, right? Things like faster approvals, more building, lower costs. But as of now, concrete details are very thin. Timelines are obviously very political, and legal challenges are likely. Now, both President Trump and President Obama have widely started expanding the use of executive orders. But the reality is, an executive order is not law. And so that's where these legal challenges could come in. And we're also going to get into later in the podcast the idea that there's 50 states all with their own legal rules, zoning, and restrictions, right? So it's not as simple as just a stroke of the pen. But let's dive in and separate sort of what's real and what's noise. So today, what you're going to learn is what's actually being discussed, how supporters and critics can frame this move, and the practical implications for multifamily operators as well as passive investors over the next 6 to 18 months. Now, before we dive in, I thought we'd give you a quick update. We recently closed on our newest acquisition, Faris Residences Georgetown. And at Faris Residence, our mission is to go full out for our residents and provide the best living experience in the world. I was just on site. We closed just a few weeks ago. So our full out 28-day transformation is in full swing, and we're tackling some big projects. So candidly, this one will be a little bit more than 28 days as we are replacing all of the roofs. And by doing that, we obviously have to delay certain things like painting because the roof replacement will create a lot of dust and debris. And so we don't want to paint and then have to repaint later. But what was amazing and what I really wanted to share is the impact we're already having on residents. So this property was originally owned by the prior owner. They closed in 2015. And I'm not disparaging them, but they just didn't do a lot to keep the property up to modern standards. And so residents on day one were coming into the office, curious about what we're going to be up to. And on day one, we had already rebranded. We had started pressure washing. We started trimming trees so they could see change was coming. But there was this interesting moment where a resident came in and we mentioned the roofs would be replaced. And he said, "Oh my gosh, that's so exciting. Occasionally when it rains really hard, I get a little bit of a leak in my bathroom. And it's just very frustrating." And our property manager just happened to say, "You won't have to live like that anymore. We're going to take care of that for you." And she turned around, and this gentleman actually had a tear in his eye. He said, "Nobody's ever treated me like that." And so that's just one example. While I was on site, I met many residents, and literally two of them came up and gave me a big hug. I'd never met them before, but just so thankful to see all this activity in action and us working towards making their living experience number one, best in the world, but just better, right? Residents shouldn't have to worry about roof leaks. They shouldn't have to worry about their plumbing system. They shouldn't have to worry about, lights going out and making it sort of feel unsafe coming home at the end of a long day. So we've replaced all the lighting, a lot of great activity coming. So look for more updates in this space in the coming weeks. We're actually putting together a reel showing the before and after that we'll share out to our database as well as within our newsletter and to our investors. So if you want to stay up to date on what we're up to, go to fariscapitalpartners.com. You can sign up and get on our newsletter, get on our deal alerts, and see more about what we're up to. Now, if you also like to learn more just in general about our style of investing, go to fulloutinvesting.com. That's fulloutinvesting.com. We have a sample deal deck, and you can book in a time to talk to myself or Mark to learn more about what we're up to. Now, before we dive in, I think it was worth really doing a primer on what is going on in the U.S. housing market. And a lot of our listeners, I'm very well aware, are Canadian, and you guys are experiencing a lot of these same challenges. So really, if you look back over the last 20 years, what happened? How did we end up here with this major housing shortage? Well, the Great Recession was a large culprit, right? Because there was effectively a 5-year freeze on development. It was hard for builders to get construction loans. The market was turmoil. Real estate was the cause of the crash, right? So banks were just very cautious on lending money. And so we got way behind on new supply. Another factor is that there was always this idea that baby boomers were going to downsize, right? When they reach retirement, they would sell their homes and go maybe into a condo or an apartment and open up that housing stock for new younger buyers to potentially take over. But because of some of the things I already mentioned, this housing shortage, this extreme recession we went through where opportunities for folks coming out of college were thin, a lot of people stayed at home. So baby boomers stayed in place. And we're still seeing that trend today. You're seeing people living at home longer, maybe going to college and coming home and living for a few years, ideally, maybe to save up for a down payment, right? But, job opportunities were slim. And so they were forced to stay home a little bit longer than maybe we had in the past. So all this is happening. And around the same time, we started to see a rise in things like land costs, materials costs, which has been exacerbated candidly by things like the tariffs that Trump's administering. So we're going to get into all this a little bit deeper as we go through this, but I thought that primer was a good place to start. Now, the other factor that we haven't yet talked about is regulatory costs. And this is what this housing emergency Trump is proposing is looking to address. And it's the idea that often with good intentions, cities, counties, states, and even at the federal level, we have a lot of regulation, right? So environmental studies need to be done before land can be developed. And in some states, that process can take a year, which is absurd, right? And so getting those regulations dialed back just a little bit, we still have to look out for the environment. We have to make sure we're building responsible, safe housing stock, right? So not just rushing in and building cheap housing stock that isn't built to last, right? And so it's well intentioned, but regulatory costs can also look like, certain municipalities saying, you have to build this building with four-sided brick, or you have to have a certain design aesthetic, and all those things add to the cost of building a new home. Now, let's go back and look. What was the average cost of a home in the United States from, say, 1960 through today? Now, all these numbers are adjusted for inflation. So it's a true apples to apples comparison. So in the 1960s, the average home cost in the United States was $230,000. In the 70s, it rose to $280,000. In the 80s, it rose to $336,000. 90s, $355,000. So you can see it was sort of a steady increase, but nothing over the top, nothing too dramatic. Then we get into the early 2000s. The average home cost now $446,000. Go to the 2010s, $469,000. And from 2020 to 2025, today in the United States, the average home is $651,000. So it's an affordability crisis, right? Builders build new housing stock, and a new starter home is probably going to cost $350,000 to $400,000, depending on the municipality and the area it's built in. Depending on the cost of living and various other factors, where maybe 5-6 years ago, that would have been $250,000. And just since the pandemic, in many metropolitan areas, the average home value has increased by as much as 40%. So this is absolutely a crisis, and one I don't really see an easy fix for. So let's dive in. What's being floated? What is Donald Trump talking about with his housing emergency? So the pledge is they want to make housing affordable again, which is certainly a commendable thing and something we can all get behind regardless of your political affiliation. So expanding home ownership, cutting red tape. There was a HUD event recently, the Housing and Urban Development Department of the United States, and all the themes were, wrapped around streamlining permit, lowering building costs, and enhancing building technology. So, for example, right now you're seeing some people play with more manufactured style housing, not necessarily manufactured homes like we used to think about, but prefab construction, where the home is largely constructed at a factory and then shipped to the location and put together. But the reality is if you look at that technology today, the per square foot cost of that home on a prefab construction is actually higher than doing it sticks and bricks. And the other factor is how do you transport this stuff, right? So the only way that it really makes sense is via train, because over the road it gets jostled around, things get loosened, and the construction integrity can be negatively impacted. So, I'm thinking with 3D printing, more focus and more investment into prefab construction will solve a lot of these problems, but I don't see light at the end of the tunnel quite yet. This might be 5-10+ years away. It's interesting. If you asked me 5 years ago about 3D printing, I would have thought we would have been much further along. In fact, I remember reading an article suggesting that, the idea that when you go get a repair done on your car and a part needs to be replaced, that the dealership will just be able to 3D print that part and you won't have to ship it from overseas, and it'll reduce the cost of repairing cars and all this great stuff. And here we are 5 years later, and I don't think I've heard of anything like that happening, right? So this stuff will come, but unfortunately sometimes it takes a little bit longer than we'd like to think. Now, what is this potential emergency declaration, right? So it goes back to, this is an executive order, so it's not law. Now, what it does is it directs Congress, the House and the Senate, on what the president and his administration wants to accomplish, but it isn't law. And the other factor is the federal government doesn't necessarily have the ability legally or practically to influence local regulations, right? So you'll see different states embrace and some states not embrace. Now, I will say, for example, California, which is a state with a lot of regulation, they have already come out and saying they want to start to reduce some of the time on environmental studies and feasibility studies that, as I mentioned earlier, could take up to a year, down to like 30 to 60 days. But that's not going to happen overnight, right? I mean, we are talking about the government here, and things always take longer. I mentioned it relative to technology, but I'm a firm believer in what Bill Gates said. It's a quote he said years ago, that you always overestimate what you can do in one, but underestimate what you could do in three. So I do believe positive change will come, but it won't come as quickly as we would hope. Now, the House Financial Services Housing Subcommittee Chair Mike Flood called this emergency order a potential game changer. So I am taking that at face value and hoping that is what we actually see. But it is important to separate like what we actually know today from, sort of the hype, right? Like, what is the hype around this? So, policy specifics at this point remain very limited, right? It's just, hey, we want to reduce regulations. We want to make it easier to build homes. We want to make it easier for people to get loans for homes. And of course, Donald Trump has been putting pressure on the Fed to lower interest rates. But at this moment, and as it was designed, the Fed is an independent agency that does not have direct responsibility to do what the president's bidding is, regardless of political party. Now, I do expect we will see some moderate rate decreases over the coming months, because we have seen inflation start to increase again. But that could be something that, once again, that aforementioned inflation could keep those rate cuts very moderate, because by cutting rates, that is inflationary. So right now we're in this sort of wait and see mode, right? We have not yet seen the impact of Trump's tariffs. Now, I will tell you, as an individual, I do not agree with the tariff policy, particularly when it relates to our neighbors at the north, Canada. We are a Canadian company with a presence in the US. But Mexico is another great example, our number 1 and 2 trade partners. And we should be finding more ways to work together, in my opinion. But I'm not the politics guy. I'm not a politician. And that's just my opinion. But I am not happy with some of the things that are happening with the tariffs. But I'm also not an economist. So maybe I'm wrong. We'll see what takes place over the coming years. But that policy of implementing tariffs is absolutely driving up the cost of the home, right? Aluminum, copper, lumber. These are all things we get from our closest trading partners, including Canada and Mexico. And so that is just something I have not yet been able to wrap my mind around as an individual, but we'll watch and see how that plays into this. And does this housing emergency potentially have the ability to maybe change Donald Trump and his administration's opinion on how we are treating some of our closest trading partners, like Canada and Mexico, as an example? But right now, there is no sort of mechanisms. They haven't explained exactly how this will happen. And I will say that a lot of critics have already spoken out to say there will be legal pushback and court scrutiny, because once again, in the United States, we have states' rights, not too dissimilar from how the provinces in Canada. I will say the Fed, the government, the federal government in the United States has more power than the federal government in Canada over the states. But largely, a lot of these laws and rules are at the state level. So this is kind of more of a rallying cry. And I think drawing attention to an issue that I think has not been talked about enough in a very vocal way. So that I do absolutely agree with, but it'll be interesting to see how this plays out. So, let's just really be clear here. We don't know how this will play out. We don't know today exactly what will happen. But once again, we're excited that it's being talked about, because even for us, we benefit from, at Faris Capital Partners, from the lack of housing supply. Less supply, more demand, that means prices go up. But at the end of the day, if people can't afford to pay their rent or to pay their mortgage, the long-term reverberations in the economy will be felt. And that means we won't have residents that can afford, right? So we do believe we need to do more to build more housing. Now, as our strategy at Faris Capital Partners, if you've been listening to our podcast, we go to areas with lower new new supply coming online, population growth, and things like that. I guess the bottom line is there needs to be a good balance, right? We need to keep up with population demand, not overbuild, but certainly not be undersupplied like we are right now. Now, the National Association of Realtors says that as we sit today, we're about 4 to 6 million homes shy of where we need to be just to keep up with demand, and demand is continuing to rise. So, let's talk a little bit about like the competing narratives around this. I've touched on some of these topics, but the proponents say, look, we need to cut red tape. Totally agree with that. We need faster approvals. 100% agree. And maybe we need to open up some unused federal land. Now, when I say that, I can imagine some people are listening to this, because I will say we need to be doing everything in our power in Canada and the United States to protect the beauty of our countries, right? Those national parks, national monuments need to be protected. But the reality is the United States owns a lot of land that is just sitting stagnant. Whole swaths of states that are just vacant land. And it's not to say that we should just overbuild and build wherever we can, but certainly some of this land could be used for increasing our housing supply. So actually, one of Trump's campaign promises was doing just that. Another promise he made that we're starting to see a little bit of is actually taking unused federal buildings. So say, for example, there's been recent projects that have converted old schools that are no longer in use, old post offices, and they're being converted into multifamily housing. So love to see that. It's creative. It's a unique approach. But with the federal land, the idea is that they can sell this land at a discount to the developers, and maybe offer some tax incentives, which will help lower the cost of the finished product, right? Because land cost is a huge factor in the cost of new housing, right? It really comes down to a few things. It's land cost, it's materials cost, it's regulatory cost, and then you have your labor cost, of course, right? I can touch on labor a little bit. A lot of the labor in the United States in terms of construction is done by immigrants. Many here legally, many here illegally. It's sort of a dirty little secret. It's not really even a secret. It's pretty well known. In some estimates, up to 40% of the team or the people that work construction in the United States are actually here illegally. So what I'd like to see is, as Trump goes through this process with ICE and is trying to, clean up the street, so to speak, of all these illegals that came across the border without following the proper approach, what we also need is a very robust reworking of our immigration strategy to make it easier for people to come over. Candidly, a lot of Americans don't want to do those jobs. It's just the reality. And we can have arguments about that all day. But at the end of the day, bringing in labor that wants these jobs, we need to make it easier for those individuals to come in. And, at the end of the day, the United States is a nation of immigrants, and we should not forget that. So all that to say, it's all about, more supply, lower costs, improved affordability, and then helping to spur more transactions through things like lowering interest rates. Now, skeptics would say, emergency powers are kind of narrow. They're challenged in court often. They're slow to affect local zoning, if at all, and results could be incremental rather than transformational. But, once again, I don't want to sound like I'm being negative here. It's just the reality of the way that this is being proposed in terms of an emergency order. So what I'm hopeful for is this conversation now takes place and people start to realize that something has to happen. And as I mentioned already, we're starting to hear, governors, mayors start to speak up to say, yes, we are going to work towards this to make it easier to solve this problem that has the potential to become somewhat catastrophic if something's not done soon, right? Not today, but 10, 15 years. Now, going back to our investors, right? As an investor in one of our deals, or if you're contemplating investing, this housing supply challenge is actually providing us with a lot of tailwinds. So for Faris Capital Partners, we're obviously going to be very mindful, stay very close to the news on this, see what regulations are changing, and make sure that when we're buying property, we're buying properties in areas that are already largely developed, right? So we always say we want to buy a Class B asset in a Class A area and turn it into the nicest Class B asset in that area. So when that new building down the street is developed, and say, just to give some examples here, we have properties in Charleston that we bought at 160 to 170,000 a door. We have a handful of projects there, and that's approximately the range of the per door cost. To build that same unit in terms of replacement cost, it could be anywhere from $250,000 to $300,000 a unit. So that is actually part of our investment thesis, buying below replacement cost, knowing as new development comes in. And because of that higher per door cost in that new construction project, our rents will look very attractive. And because of our value add strategy, we're adding all the bells and whistles that new building will have, just luxury units, beautiful granite countertops, luxury fixtures, all new kitchens and bathrooms, beautiful designer lighting, high quality flooring. Somebody's going to look at that and say, gosh, I could pay 2,000 or say 1,600, depending if it's a 2 or a 3 bedroom unit over here, or I could pay 2,400 or 2,600 over here. So the strategic decisions we're making around investment is largely driven by the lack of supply. So just rest assured, we'll be watching this as it develops over the coming, months, years, just to ensure that we're still targeting those high growth areas that have a balance of supply that keeps up with demand, but also leaves a little room, right? Because we want to actually have slightly lower housing, right? Because that helps with our rental rates. Now, short term, we will see some, swings, right? So until rules are published, just assume the status quo for a period of time. In other words, we're going to hear some conversations, but state laws just can't be changed because a governor or mayor says so, right? There's a process that has to take place at the state level. City councils will have to come together and approve these changes. So in the next 6 months, candidly, I don't really expect to see much change, but hopefully the conversation continues and we start to see some action take place. If rates are to come down, and I do think in mid-September we will see a slight rate cut, but it won't be dramatic. But we are starting to see an increase in sales transaction volume compared to, say, 21 into 22. Transaction volume in residential real estate for resale homes was down 40%. From 2021 to 2022, at the peak of the market, we saw a reduction in transaction volume for resale homes by up to 40%. We're starting to see more transactions occur. So really what's happened is I think individuals that are thinking of buying a home had the sticker shock of seeing rates triple. And it's been a year or 2 or 3 years now. And it's kind of just the new normal. So, the idea that you can get a 2 or 3% interest rate is a thing of the past. And frankly, I don't think that time will ever come again in the foreseeable future. And so with that, people are starting to recognize this is just the new normal and they need a new home. And so they're making a decision, right? Now, for months 6 to 18, if the emergency order materializes, the best case scenario for investors and for buyers, we just see faster permitting in select corridors, some modest cost and time savings, and then incremental new build pipelines. And then we may see more of this prefab construction. In fact, Greystar, one of the largest apartment owners in the United States, they own and operate many existing buildings, but they develop new. They're doing prefab construction. Now, what's interesting is I mentioned it before, but the buildings they're building are along the rail line and their factory is on a rail line. So right now it's fairly limited, but they're testing it out and there has been some positive results there. So I think you'll see more of that as we start to, move into the next, say, month 6 to 18 from today. And if the courts slow things down, we might just see some patchy incremental change even within that 6 to 18 month period. Now, going back to Faris Capital Partners, right? At the end of the day, we can't influence policy. Now we can, reach out to our senators and our Congress people and support these things. And by the way, I do. But with that, what we need to focus on is what we can control. And so rising interest rates going up or down, whatever those things are, it's why we always do fixed rate debt. And we only buy deals that cash flow on day one. So this is already a property that's being well managed. Now, often we know we can come in and manage it much better, and we can, renovate the units in such a way that we can command better rent, and we can, provide an exceptional living experience that in and of itself adds value to the residents and values back to our value back to our investors. But at the end of the day, with our reserves, our cash flow on day one policy, and fixed rate debt, we're not going to allow policy to decide the performance, right? We're going to buy good deals in great areas and we're going to make those good deals great. That's the bottom line. In terms of market selection, it's all about pro-growth, landlord-friendly metros, already improving, right? So markets like Atlanta, Tampa, Charleston, Sunbelt markets where there's already less regulations and landlord-friendly laws that allow us to make decisions when a resident is negatively detracting from the community, whether through lease violations or non-payment of rent. and we're going to underwrite deals with great discipline and a very conservative approach. So, there is a lot of noise out there. We thought we'd take a moment just to explain a little bit about what's going on and what this executive order and emergency order could potentially mean. But I guess the bottom line is I think that what it's really doing is starting a more open conversation, which is very positive. But I don't expect to see any major changes in the next 18 months to 2 years. Now, I know making predictions is often a fool's errand, so I hope I'm proven wrong. I have no problem saying that, but I'm also a realist, and I just think that we're going to see 50 different states all have to wrestle with these challenges and these problems. But I'm excited that the federal government is now finally shining a light on what is a major challenge in the United States. And I'm hopeful that Canada starts to see some of that as well. Now, I will say, if you actually look at Canada's building pipeline, particularly in markets like Ontario, there are a lot of purpose-built rentals, housing properties being built. And so there might even be some oversupply, frankly. If you look at the pipeline, there's a lot more being built than population growth, but that'll hopefully help ease rents, right? So there are some things happening in Canada as well, and we'll do a podcast on that topic before too long. But here's what you really want to watch at the end of the day. What do you really need to pay attention to? What does the actual housing emergency order say? Right now, it has not yet been released. So we don't know the scope of it, the authorities, nor the timelines. And then the next thing we're going to watch is, what does the HUD and the Treasury say, right? Are we going to start to see rates come down? Will HUD start to release some federal lands for development? Will we do some permitting standardization? These are things that we have yet to see, yet to know, but it's something we'll be watching closely. The third thing will be court challenges. What's happening at the state and the federal level? Is there pushback or any delay in the implementation? And then once again, the rate path, what's going to happen with interest rates? Because if interest rates stay elevated like they are now, and let me be clear here, our interest rates are actually about average where they've been over the past 30 years, but we're still in a bit of phase of sticker shock. I mentioned you start to see people are getting used to that new normal, but we're still working through that process. I almost joke a little bit sometimes with my friends, but we're still in that process of grief around going from 2 to 3% up to 6. So, at the end of the day, just know at Faris Capital Partners, we keep a close eye on anything that could positively or negatively impact not only our investments, our investors, but our overall investment thesis. So we'll be watching this closely and updating you as we see more. Now, once again, if you like what you heard today, if you'd like to learn more about what we do at Faris Capital Partners, go to fulloutinvesting.com. You can download a sample deal, get a sense of the kind of deals we pursue, what our underwriting approach looks like, how we stress test our deals. You can also book in a time. Thank you so much for listening to the Multifamily Investor Playbook. We love and believe in you. If you found value in this, please like and subscribe and share with another high net worth individual, and have a wonderful day.